Well, the House finally cleared the way for debate on 3 key crypto bills after hardline Republicans were convinced that by President Trump and Speaker Johnson. The Genius Act expected to be the first on the president's desk for signage after it passes the House and, of course, passing the Senate already. Joining me now in a First on Fox Business interview is the chairman of the Securities and Exchange Commission, Paul Atkins. Mr. Chairman, great to see you this morning. Thanks so much for being here.
Thank you, Maria. It's great to be here with you.
So let's talk about the framework for digital assets. It was real debate within the House this week because many of the Republicans want to ensure that there is not a central bank digital currency. How do you see things?
Well, I'm glad that they are addressing the issues and are moving forward. So I look forward to having them sign the Genius Act. I think that will be an important step forward for the markets and for innovators and for conducting payments in the financial system.
Right. I mean, the Senate's stablecoin bill did not include the ban on the Federal Reserve issuing a central bank cryptocurrency, while the House, of course, did, and that was the pushback. Can you talk to us a little about why that would be important to ensure that there is not a central bank cryptocurrency?
Well, I think it's best for that sort of thing to be left to the private sector. The government can mine the legal tender and the dollar itself, but the means of transfer and that sort of thing, I think, is best left to innovators. And we don't want to become like China, where you have the threat of a government that can, run roughshod over people's bank accounts directly. So I think it's best to leave that to banks and financial institutions and whatever may develop in the next few decades as far as where people put their money and how they transfer it.
Yeah, I mean, some conservatives wanted to ensure that the stablecoin legislation be married to the Clarity Act. I mean, the Clarity Act provides this framework for the digital asset market structure, including what the requirements are for the Securities and Exchange Commission versus the CFTC in terms of oversight. I want to get your take on this, and I spoke with the president of Circle, the stablecoin issuer, about this yesterday. Watch this, because I asked him about the potential for consolidation between the SEC and the CFTC. Watch. I wonder if you would support a merger of the SEC and the CFTC. Should the SEC acquire the CFTC?
Or perhaps the other way around. Many market participants would say that. Look, I think there are more important things to do than to worry about the government. Possibly down the road, but I think at this point in time, getting the law right for the industry, getting the law right for the American people is more important than sort of Washington housekeeping.
Mr. Chairman, is that something that you would support, a consolidation of the agencies?
Well, Maria, that's great to see Heath on the tape there, Heath Tarbert. So for years, I've supported consolidation of the two. I think it makes a lot of sense, especially with the potentially overlapping jurisdictions of it. But I agree that that's not the primary job that we have before us. What we have to do, and I look forward to doing this when the new chairman of the CFTC is confirmed and takes his oath of office, is to work hand in glove with the CFTC to make sure that the two agencies are completely in sync, because for too many decades, the lack of collaboration between the two at all levels, and especially at the staff level, has led to uncertainty in the marketplace, the lack of ability of people to move forward on various products. And so we've got to put that at an end, and the two agencies have got to work together. And I think, there's every reason to do it, and there's no reason to think that we won't. So I intend to commit myself to that.
Mr. Chairman, how do you want to see the regulatory backdrop changing? I mean, I want to get your take on the landscape, whether it be crypto or the overall business environment. The last time we spoke, you told me that you want to see the market open up to further IPOs, that companies do not go to places like Dubai to take their companies public. The regulatory environment was constricting a lot of activity. How have things changed, and what do you want to see further change?
Well, as we talked the last time, and thank you for bringing it up again, we've got to pay attention to our capital markets. America has the best and deepest and most liquid capital markets in the world, but we've seen a drop-off in IPOs and new companies going public because there's a lot of reasons to remain private. There's a lot of capital out there, but I think that's a loss for investors as a whole and for the United States to not have a robust new product, new capital markets for companies coming in. There are a lot of things that we can do. There are a lot of reasons for that, among which is just the rules that are so expensive for people to comply with in going public, litigation, the threat of litigation and that sort of thing. So we can clean a lot of that up, and we intend to do that here in the next couple of years. It's been a long time in having all this regulation being built up over the last number of decades, but there's no reason for the Wilshire 5000 to now only have 3,500 or whatever companies in it, and for our having about half the number of public companies as we did 3 decades or so ago.
That's a great point. The Wilshire 5000 is the Wilshire 3500. Speaking of privates, everybody wants to get their hands on some of these growth stories in the private market, and President Trump is expected to sign an executive order opening up 401ks to the private markets. Chairman, what do you want to see there in terms of private businesses, and what should we be thinking about in terms of the metrics, the important metrics to know that what we're buying is safe, even though these private companies are not going to be regulated the same way as public companies under SEC and accounting rules?
Well, that's a great question, Maria. So I welcome the President's guidance on that if he chooses to issue an order. But beyond that, I think we have that ahead of us as regulators to try to focus on those markets, because the private markets are mainly institutions and well-heeled investors who invest in it, and they either are able to navigate the various intricacies of those marketplaces or hire people who can help them. As far as normal investors, there's a big demand out there for those folks to be able to invest, and that's from the investor side, and then also obviously from people who are looking for that sort of capital investment in their companies. So we need to make sure that if those sorts of people are able to put this in their retirement accounts, that we have parameters around it, that we have it buttoned down so that they know the risks, that they know the potential of lack of liquidity in those investments, and so they're really for long-term types of investments, and they need to be have parameters around them as far as those investments go.
Well, I mean, speaking of the parameters and the rules, we spoke about this briefly the last time. We talk every day about China, Mr. Chairman, and the way that the Communist Party has undermined America. We know that Congressman John Molinar from the China Select Committee, along with Senator Rick Scott, are asking you for answers on China's access to U.S. markets. They wrote you a letter saying, quote, "We request an urgent briefing to better understand the current agreement with Chinese securities regulators, as well as the implications for U.S. investor protections." I spoke with Congressman Molinar this week about so many Chinese companies that are traded on U.S. exchanges, basically enabling ordinary investors to fund the expansion of our number one enemy. Watch this. I know you sent a letter to our new SEC commissioner, our new SEC chairman, Paul Atkins, about all those Chinese companies trading on our exchanges. Do you expect the SEC is going to do anything about it? Because I asked Paul Atkins exactly about this based on your letter.
First of all, let me say Chairman Atkins is doing a great job. We need to start asking the CEOs, the business leaders, the question is, how much are they willing to invest in China's military industrial complex that is on a wartime footing and use American investor dollars to build that capacity? And right now you have J.P. Morgan Chase, you have Bank of America partnering with Cattle, helping Cattle, the automotive battery manufacturer that partners with the military, uses supply chain labor from Xinjiang. And we need to start asking the questions of those CEOs and hold them accountable to use American priorities, not just simply looking at the bottom line.
And I know, Mr. Chairman, there are a lot of nuances here. I mean, you know, what Molinar is saying is right. These Wall Street firms are making big money on Chinese IPOs. Cattle went public, this battery company. It was a huge boom for the Wall Street firms. But, you know, when it comes to those companies trading on our exchanges, some of those Chinese stocks have already been sanctioned. Some of them are on lists, and yet they still are on exchanges, enabling ordinary investors to fund the expansion of our #1 adversary. And many of these companies still do not follow the accounting rules that every other public company follows. So what can you do about it?
Well, a number of things, Maria, and thanks the Congressman and Senator Scott for their advice and raising this issue. So we've already started to take steps. So here I'm now in my 3rd month, and so we've come out with a concept release, we call it, regarding foreign private issuers. There are a lot of Chinese companies and others that use the United States and get kind of special treatment vis-a-vis American companies for listing here, even though they're not operating here and they're not incorporated here. And that's all of their special dispensation is predicated upon the assumption that they have good, robust regulation in their home country. Well, that's not the case, especially with a number of the Chinese companies who are here. They operate back there, but they really just trade here. So we're going to look at that. We have limited ability to remove companies from trading here. We have there's a statute that was passed a few years ago aimed at Chinese companies in particular, but that has various constraints around it, and so we're looking to toughen up our abilities to look at any sorts of scams that may be going on and to take strong action in that area.
I mean, at a minimum, can't we force them to follow the same standard accounting rules that every other public company follows?
Well, that's what we're working on, and that's what that whole release was about, in order to undergird the current rules and to cut through some of the ways that people have been able to skirt the rules and the standards that we have here. And then with the Public Company Accounting Oversight Board, they have arrangements with China, and so I want to look into that and see just how effectively that's been going.
And real quick, Mr. Chairman, before you go, these proxy firms, you mentioned this the last time we spoke about the influence that some of these outside proxy firms, have on shareholders. I mean, if they say, look, we're against this merger, we're against this, I mean, shareholders follow suit. Is there anything you've done already, I know it's month 3, or are planning to do with regard to those outside proxy firms?
Well, we will be looking very intently at that area. I think that some of this is what's the root cause versus what's the symptom. I intend to get down to the root causes of that and make sure that everybody stays in the proper lane and is following what the fiduciary duty is with respect to investors and how they comport themselves in the marketplace.
Mr. Chairman, it's great to talk with you, particularly at this moment in time where we've got these vibrant markets, knowing that they are safe as well. Thank you so much for being here, Paul.
Thank you, Maria.
All right, Paul Atkins is the chairman of the Securities and Exchange Commission, and we'll be right back.